a new segment for you, and that is NDTV Profit's cracker stocks. And we've got Samir Dalal at the start of the show to tell you what his cracker stocks are. Samir, thanks so much for taking the time, and wish you and your family and your team festive greetings as well. Where do you see, first of all, the benchmark? And that's the hardest thing to do. So maybe you can throw your dart into the darkness. Where do you see the benchmark next Diwali?
Yeah, thank you for having me on your show, Alex, and wishing you and your entire families, your viewers, their families a happy Diwali and a prosperous year ahead. Now, coming to the question at hand, where do I see the Nifty for in the benchmark? Well, for the next 6 months, I see it stuck in a range. I'll be very frank with you. You know, these technical breakouts and all these things that keep happening is all well and good. But fundamentals still are not justifying why there should be a run-up right away. We haven't seen the consumption story picking up or playing out. So I would like to say that for the next 6 months, at least in a range up to 24 to 26, and then based on how things work out, it'll be easier to make a call whether we could probably see the Nifty moving up. Net, bottom line, I believe the Nifty over the next 2 years will move up, but it will be based on how things happen. So difficult to take a call, but I'd like to say between 26 to 28,000 would be a fair value for the Nifty. So you're talking of a 8-10% rally in the next 1 year.
Samir, what are the sectors that you will be foraying into in the next 1 year, from this Samvat to the next Samvat?
So we are already forayed into them, and we've been positive on them for quite some time, Mahima. We've talked about the consumer space. We believe that given all the incentives being given by the government, RBI, and we expect maybe one more rate cut in December, if that comes through, it leaves more money in the hand of the consumer, and consumption should start seeing an uptick. So we are very positive there. We think the entire space will do well, be a little selective where valuations are a little better, or the growth could be a lot stronger. So, you know, in consumption, unfortunately, valuations are already very rich. So you've got to probably look at where growth would come in more. The other space that we are very positive on is the banking and financial services. If you look at it, NBFCs have already seen a huge run-up. Some of them still have opportunities in them, which haven't run up. So maybe you can look at those banking stocks or something where, you know, stocks haven't run up too much, where there's valuations decently priced. I think those could probably see an uptick. And the third is the auto ancillary side, where we think, you know, because the growth in the autos is expected to sustain, the auto anch space is expected to do well going forward. So these are three spaces that we kind of like at this point of time. But of course, things will keep emerging and changing over time. Cement is something which could probably look attractive if the real estate side starts seeing an uptick as well. So we got to see how things play out. But at the moment, these three are the three top focuses for us.
Would your stock picks at this moment for the long term, based on fundamentals, of course, be in these spaces?
So they are obviously in these spaces. There are also some of them which we had bought long before, where we still remain very constructive, like energy, renewable energy, stocks like Sterling and Wilson Solar, or Suzlon Energy, where we remain positive, NTPC Green, where we remain. So there are stocks outside of these spaces. But yes, if I had to do incremental buying at this point of time for the next 1 year, this would be the space that I would do it in.
Okay. All right. Samir, absolute pleasure having you as always, and look forward to the next chat. Talk soon.